as we bullshit waiting for traditional markets to open. This is fuck man.
Hang on. Before we jump into that, hang on, because we got a couple people on here that I want to make sure I make RMLR clear. Scary had asked about that. Is that all right? Can I talk about that for a second before the market opens?
Yep, go, bro.
Yeah, all right. Iscariot, if you're listening, I hope you are. If not, you'll see this in the YouTubes later. But basically, RMLR is extremely useful for long-term analysis of like getting the high time frames like I wrote, because you can see very clearly that the returns moves the price action to and from the mean, obviously, and the reverse mean, and back and forth, and it kind of zigzags across the mean. And when you have things like an intersection of an RMLR and a mean, when an RMLR crosses a mean, you usually get a nice move within a couple of candles, and you can look at the daily chart to see that for an example in the last few weeks. And when you have a move of the price action separately, when you have a move of the price action gets to a third standard deviation of the RMLR bands, you basically very, very rarely, pretty much never, but very rarely have like one or more than one RMLR hit that third standard deviation and stay above it. It usually pulls back within it, and when it does, a mean reversion begins. So when price action again hits third standard deviation of the RMLR, that's pretty much around the time you better start looking for a mean reversion to start. It happens like clockwork, and it happens a little bit more often on the low time frames that you'll get one or two or maybe three little touches within a few candles, like on the 1 minute I'm talking about. But anything higher than like 1 minute, 3 or 5 or 15 or whatever, if you see even a one candle hit the third standard deviation of the RMLR, there will be a mean reversion. I mean, that is extremely probable, very, very, very high probability. What is useful also on the low time frames is because the direction predictor, when it's set on the right settings, tells you very accurately the direction that is likely to happen, and you have the direction of the RMLR being predicted very accurately by the RMLR. Those two things together can be, let's just say, dynamite for scalps. It can be extremely useful to scalp with that indicator, the RMLR.
Oh, dude. Big time.
Yeah. So that's basically how I use it. And sometimes I put two of them on a chart, or very often I leave two of them on a chart with different length settings, like 3012 and 1110 or whatever. And it's in the channels also, the other stuff about it. But those, when you see like two RMLRs cross and cross a mean, and they both cross at the same time, and you got like the mean in between, oh boy, you tend to get some nice moves on that. Like on higher time frames especially, but even on low time frames, it works out very nicely. That's how I use those, as like kind of like a scissors. And the reason for that is very simple. When you have the RMLRs and the means crossing, you typically have low volatility or low variance, whatever you want to look at, very, very low. And then there's really not much for the volatility to do except expand, right? So you'll typically see the RMLR and the means cross, again, when there's low volatility and often low correlation, or low volatility and high correlation, and there will be a significant move as a result. That's how I use it, in short.
Which is great. So yeah, I did notice on your charts you're running. So are you just running two different lengths of your RMLR, or what? What are you doing?
Yeah. When I put two of them on there, so I'll have like a 3012 and an 1110, and I'll look and I'll notice and I'll keep an eye on the volatility, and see that when the volatility is low and they intersect with the mean, I mean, you know what they say, the tendency is, right, when you got low volatility, it has to expand, and depending on what the correlation is, if it's high or low, if it's going to go up or down, the direction. It's very, very, very probable going to do what the tendency says.
Yeah.
So that's how I use it to scalp, and that's also how I use it to analyze long term. But on long term, I don't really I mean, I will look at it with the two RMLRs, but it's not so necessary, unless there's like a crossing happening. Then I'll slap a second one on there just to confirm if there's a double RMLR cross or something. But short time frames, I definitely use two when there's a cross to see that. And then there's the variance or the volatility or the z-score or whatever, and you'll see that there is typically just extremely low volatility when they cross, and it's getting ready for a move within a couple candles. Happens like clockwork. Sometimes it's 3-4 candles if it's like on a Thursday, and then Friday, Saturday, Sunday happens or whatever, and it'll be like on Monday you'll get the move, or Sunday night, when the markets go back, CMEs or whatever. So those kind of things happen a lot with the RMLR, and that's why it's one of the reasons I find it to be extremely useful indicator. Not to mention the fact that it's an indicator that literally tells you something about the future, just like the projection bosses tell you something. The projection bosses tell you a very nice range of what's likely to happen in the future based on standard deviations or Laplace distributions.
Mm-hmm.
Similarly, the RMLR is extremely accurate at telling you the direction of the RMLR in the future. It doesn't tell you exactly the price because it's not a price indicator, but it does tell you the direction that is most likely to happen. Especially in normal settings like 3012 or 1110, you will see most of the time the RMLR does go in that direction. Why is that important? Well, if you know the direction of the reverse mean, you can figure out what the direction of the mean is also going to be in that time frame. And then you can have an idea of whether or not there's mean reversion happening to the upside, to the downside, or sidewalking, or whether or not there's no mean reversion happening because the move is still happening where it's moving away from the mean, right? It's either trending away or randomly walking away from, or trending towards or randomly walking towards the mean, right? That's all price action really ever does in relation to that, because it's following the returns. So when you know the reverse means, literally, when you know the future of the reverse means, the future of the likelihood of the returns action driving the PA a certain way, which again goes against everything every financial service or product will ever tell you, which is that past price action does not predict or is not a predictor of future returns, as a complete lie. And I can prove it. Like, we know it tells you the future of the reverse means, therefore it tells you an indication of the future of the means. It's just the reverse, but it is absolutely spot on accurate for 99% of the time or more that I've looked on any asset on any time frame.
Mm-hmm.
And I can't really say that about too many other indicators.